me put my do not disturb on. All right. Hey, good morning, everybody. Good morning, Brad. So we're back, and yesterday we were talking about fix and flip for 1 to 29 unit properties. Today we're just going to talk about fix and flip program for 1 to 4 unit properties, which obviously that's going to fall under residential, and it's going to be a lot easier. You know, you're not going to need the investment experience that you would need with with um, with over 4 unit properties. And also, me and Brad were just talking about how well you can buy an investment property with Fannie, Freddie, or FHA, but that can be more restrictive. You're going to need tax returns or W-2s and pay stubs. So um, with this option, we can go just off of the rent, or so we would use the debt service coverage ratio, and as long as the rents, you know, uh, meet the DSCR ratio or cover the mortgage, then we don't need tax returns or W-2s. Brad, you want to go into some more specifics?
Yeah, sure. And, again, hi, everybody. Thanks, Jacob, for having me on again. Um, so, like Jacob was saying a little bit earlier, our 1 to 4 unit on our fix and flip program, it is a little bit more broad, or, you can qualify borrowers a little bit better, especially the first time flippers or the first time rehabbers, whatever you want to call them, because we do allow somebody with zero experience to start working on 1 to 4 units. We don't want them, like I was saying yesterday, to start jumping into the 5 to 29 before they have the experience on the smaller projects first. And on the bigger projects, we're as a lender, we're going to hedge our bets a little bit more by requiring a little bit more down on the 5 to 29 units. On the 1 to 4 unit properties, especially if you're a little bit more experienced, you're going to get a lot better terms. So, I'm just going to start off by sharing my screen. I want to jump into it. Give me a hot second here to share. So I want everybody to take a look at this credit box here, and this credit box is just going to give you a really good idea of the ranges of the rates, what you're going to see, as well as what experience is required to hit those rate ranges and the LTVs and ARVs. We don't allow heavy rehab with somebody that doesn't have any experience, and I'll get into that a little bit more in depth here whenever I start talking about the experience tiers. So the minimum loan amount on our 1 to 4 unit is, with rehab, it's $75,000 on the purchase, and we do have just a regular bridge product that if you don't need rehab on it, maybe you want to try to close cash, but have a week and a half, 2 weeks to close. This bridge product might fit into that bucket or fit into that need. So that's why you see purchase up here at the top, purchase up here at the top, purchase with rehab, and then refinance. So purchase, like I said, that's more of like a kick save type loan. It's a bridge loan. That's just for straight purchases. Maybe if you submitted it at another lender and somehow it fell out, maybe they're just taking a little bit too long. Usually we can close this deal 2 to 3 days after we get the appraisal on the purchase. Now, on a purchase or rehab, usually we can close the deal 3 to 4 days after we receive the appraisal on a purchase and rehab, because we also need to analyze what the appraiser talks about as far as the rehab's concerned. And then the refinance, same. It's about 3 business days after we receive the appraisal. Now, the refinance is pretty interesting because maybe you are a borrower who's an investor. They paid cash to acquire the property, but now they want to get some money back. So do a delayed refinance or a delayed purchase in a sense, and also get some money for your rehab budget. So that's why we have this refinance bucket right here, is for people who've paid cash to acquire the property and now want to recoup some of that money and then start on their rehab. So again, these programs, usually it's about 3 days after we receive the appraisal before we can close. And we order the appraisals on all of these programs. So you, the borrower, you, Jacob, the broker, you don't have to worry about that. And we have control of getting this thing closed as quickly as possible. So, that's why we want to control the appraisal. So let's talk about the experience. And I did talk about this yesterday, but the experience, we give experience points, and it's all laid out here in our general information as far as how we assign experience points. So if you're a realtor, if you have your real estate agent license, we give you 1 experience point. Same way with being a general contractor, we give you 1 experience point if your borrower is a general contractor. We also give experience points if they have investment properties or if they've done any fix and flips in the last 3 years or 36 months. We also give you 1 experience point if you own some sort of commercial building, like a warehouse, office building, gas station, any commercial building. We'll give you just 1 experience point. So you can really start to build your experience with having all of those aspects to your tool belt, so to speak. And if you don't have any of those things, if you're not a contractor or a realtor, or you don't own any properties or anything like that, and you're starting fresh, we allow that. It's just the rate is going to be a little bit higher. The LTVs and the ARVs are going to be a little bit lower. And we don't allow heavy rehab. So if there's a project that just is almost close to what we call a scrape,
or tear down.
Yeah, tear down. Probably not going to be able to do that as a first-time flipper. You need to have 3 walls at least. So going back to the experience, you can get experience, and I went into this yesterday. You can get experience by teaming up with somebody who has the experience and forming that LLC. All these deals have to close in an LLC, so you're going to have a what's called a single purpose entity or a real estate specific entity to close these transactions anyway. So it probably wouldn't hurt to team up with somebody who does have experience. That way they can give you those experience points so you can get better rate and terms. But then also that could be a way to pay those people. So, if you have if you have the money or the good credit score, and maybe a general contractor, can provide the work and the experience, you can add them onto the LLC, maybe give them 20, 30%, maybe 50. I don't know. That would be between you and and that general contractor, and then you could split the profits that way by assigning a percentage ownership of the LLC once the project's completed. So that might be a way to get experience.
Hey Brad, so with the LLC, what about somebody that's a sole proprietor? What if they just form the LLC to do the purchase? Is that fine? The LLC doesn't have to be in existence?
The LLC doesn't have to be seasoned at all. A lot of times, real estate agents or these investors, they'll create literally the LLC and name it the property address. That way they can keep track of all the LLCs that they have. Right. Because a lot of times they want to limit liability per LLC to each address. So that's a strategy probably for a tax advisor to figure that part out. But yeah, so the rate range with somebody that has very little experience, you're probably going to get around. To be honest with you, the rate range says 8.5 to 12, but you're probably going to see in the 10s for your rate, especially if you don't have a very great FICO. The FICO plays into it a little bit, but it's much more heavy on the experience. So on a purchase transaction, you're going to be limited to 75 LTV, and that's no rehab. And then if you're doing purchase and rehab, it's 80 to 85 LTV, and that is depending on the property there. That's why there's not a hard number on somebody that has 0 to 2 experience, because we want to make sure that the deal can be done, and limit our risk there.
Okay, so
Uh,
you're looking at like 20 to 15% down payment for purchase
uh,
and rehab.
we have somebody with little to no experience, but if you have like 2 experience, you'll probably be on the 85 side. If you have 0, you're probably going to be on the 80. I mean, that's
Okay.
that's just a fact there. And then ARV, we talked about it a little bit yesterday, but that's the after repair value. And that's where you have to run your comps, and you really have to get good comps to make sure that these numbers work. Because if you get your appraisal in and the appraisal is way under what you projected your ARV to be, then you're going to have to really come to the table with a lot more money. So whenever you're trying to figure out if these properties are going to work, you really need to make sure that you get good comps, good quality comps up front. That way your numbers don't blow up at the end of the deal.
Okay. And then, so as far as like the type of the classification for the bars, I see down here foreign national, but this you can also use I-10 for the 1 to 4 unit flips.
Correct. Yes. So we allow 4 nationals, I-10s, and we just knock off 10% to hedge our bets on the LTV, the ARV, and the LTC. Now, the LTC doesn't really get calculated until the appraisal gets reconciled by our valuation team. We have a team of appraisers on our side that research and look at all these appraisals and make sure that the appraiser didn't mess up, and make sure that the deal works. We're doing it for the best interest of the client, to make sure that they're not in over their heads, especially somebody who's got 0 experience.
Okay.
So we're gonna like tighten the grip a little bit on the experience and the appraisal. Sorry.
Okay, so someone that has I-10 or is a foreign national, then with 0 experience, they're probably looking at like 30% down payment.
Oh yeah.
Yeah, because
Yep.
it's going to be at like 70 LTV. Okay.
Correct.
Okay,
Yep.
that's good to know. Just so we know, like, what cash is required to
Yep.
do the deal.
So
Okay.
if you look at somebody with between 3 to 10 experience, that's whenever you see that we can do the purchase and the rehab. You can get the acquisition or the property for as little as 10% down. And again, it also depends on their FICO. So if they have a really bad FICO, there's going to be a little bit of a reduction there. So again, you probably want to team up with somebody if you have a bad FICO, to get the higher FICO, because we do best case. So whoever's on the LLC, if they have experience, if they have the FICO, if they have the money, we give everybody the best case. So if you have somebody with a 500 FICO, you have somebody with an 800 FICO, you have somebody with a 650 FICO, we're going to look at the 800 FICO as far as given the experience and the LTV restrictions there. Does that make sense?
Yeah. And then speaking of like partnering up, so what if you have like a foreign national or I-10 borrower and they partner up with someone that has like a social?
We treat it the same way that we do on just the regular non-conventional or non-QM side. We go worst case on that. So if it's an I-10 borrower and a U.S. citizen, usually we'll take worst case on that. So that's
I-10,
really the I-10 or the foreign national. We do take worst case on that, but that's the only thing that we typically take worst case on.
Okay, so it'd still be like the 30%. And now what if like sometimes like what if the I-10 borrower has no credit scores? Do you guys have like a no score option, or no? They would have to have a minimum of like the
We would
600.
probably try to treat them as a foreign national if they don't have any credit. Which foreign national, we don't require credit scores at all. We actually just want to see a passport and 2 months worth of assets to close on the non-prime or non-QM side if they're just going to buy like a condo or something like that. And that's the same way that we treat it on the fix and flip side. We just want to see their passport and assets essentially to make sure that they're in good standing with their financial institution. And then we treat them as if they had a 680 or greater FICO.
Okay, and then for foreign national and like assets, I know that a lot of times you have to have those assets in a bank that has U.S. domicile, or like basically their headquarters is in the U.S., but they do business in like another country. So, um,
The money needs to be in the United States. Technically, it's 3 days before closing, but I like it personally to be here a little bit quicker than that, usually a week, just because we all know everything. Everything isn't always a 2 or 3 day situation. Sometimes borrowers misunderstand the wire instructions or whatever. Who knows the thing that could pop up? But I try to have them work on it at least a week before closing and get it here in the United States,
now when you
converted to
say
U.S. dollars.
when you and is that wiring it to title or transferring it
No,
to a
wiring it to their bank account. They need to set up a U.S. based bank account. So if it's a Canadian borrower, for instance, there's a lot of Canadian based banks down here, like TD Bank, Royal Bank of Canada. I think has some branches down here. So even if they had a TD bank account in Canada, they need to make sure that the money is converted into dollars, U.S. based dollars, and they're able to transfer that money to a U.S. domiciled bank account, like you were saying.
yeah. Okay. Well, because I'm going through this with a client right now, and okay, so this client's in Mexico, and he went to open up some bank accounts, but uh, they were kind of confused. So we looked at it two different ways. One, he was going to try to open up just a bank account in the U.S., but you have to have a physical residence, and you have to prove that you live in the U.S. to open up a bank account in the U.S. So so he has to open up a bank account in Mexico, but it has to have um, that bank has to be U.S. domiciled. So that's the thing I'm trying to figure out. Like, okay, so to prove those funds are available in the U.S., but he opens the bank in Mexico, though. So I'm not quite sure. Like, he's not
It's
gonna.
a
He's
little
not. Yeah, he's not
it's
gonna
a
be able
little
to open up
tough.
a. Yeah, he's not gonna be able to open up a bank account because I already called like Wells Fargo, Bank of America. They're like, well, he has to have a residence. So but he literally lives in Mexico. So
Yeah, I gotcha. Um, I think we might want to take this offline a little bit here, but I think I've run into this issue before, and usually if they have some sort of family members or something like that, they can um, they usually can open it up under that address and maybe have like a power bill or something like that switch to their name,
okay, all right,
something like that.
okay, cool. Okay, well, we're going on 18 minutes now. I think we covered a lot of material, and I'm sure we can go deeper into some of this stuff. But I think this is a good like overview, just
Right.
just for people to understand, this is an option that's available, especially if they have zero experience with like multi-unit properties, and it provides some options as far as like partnering with a contractor, and it's available, like whether it's regular U.S. citizen, ITIN, foreign national. So that's pretty good. Um,
Yeah, and I notice a lot of realtors, they're trying to go international.
yeah.
I know a lot of realtors um, that have shops set up in like Colombia, for instance.
Oh, okay.
Because they're trying to help those borrowers get buy investment properties here.
Interesting.
So they'll like team up with, and they're Colombian too, obviously. So that helps.
Yeah.
Hey, I'm
Yeah.
from Colombia. I live here in the United States. I know several lenders that can help the Colombian borrowers acquire investment properties here in
Yeah.
the United States.
Yeah.
How about I send you some information and they do it and they get a lot of leads off of that. And, maybe that's something that some of the other realtors, some of Jacob, your realtor partners can think about. Are they, maybe they're from another country, maybe they're from Mexico, like you were saying. Do they have any connections in Mexico that maybe they can leverage to help some of the Mexican citizens purchase investment properties here in the United States?
Nice.
So,
Cool. Okay. Well, Thanks, Brad. I think this was good. Tomorrow we're gonna be talking. Let me see. What do we have on schedule for tomorrow? Tomorrow, let's see. We'll be talking about 3-month bank statement program. So that should be good. I like that. I mean, 3 months it could be better than 12 months or 24 months.
Yeah, and I've got a couple of good selling points on that a lot of realtors themselves can actually use.
Nice.
Doctors, that type of thing. So
Nice.
if you want to go after some of those higher dollar loan amounts, this might be a really good option. And I look forward to talking about it tomorrow. So
Okay, sounds good, Brad. Thanks a lot, man.
thanks, Jacob. Talk to you.
All right. Thanks. Bye-bye.